Okay, picture this. It is Monday morning, February 2nd, 2026. You wake up, maybe grab a coffee, unlock your phone to check your portfolio, and ouch, it's just a sea of red.
Sea of red might be putting it mildly. It's pretty ugly out there today.
It really is. Stocks are down, gold is selling off, and Bitcoin has taken a serious tumble. But look, we aren't here to do a general market wrap up. We are here because this specific market move is putting the squeeze on one specific company, a company that has effectively bet the farm, the tractor, and, the barn on Bitcoin.
We are, of course, talking about Strategy Inc.
Formerly known as MicroStrategy.
Go.
Exactly. And for the first time in a long time, the math is looking a little scary. We are looking at a scenario where the world's largest corporate holder of Bitcoin is technically underwater on a $54 billion bet. So the mission for today's deep dive is simple, but it's high stakes. Is this a catastrophic failure of their digital asset treasury model?
Or is this the ultimate stress test?
Right. Is it designed to prove they are, in fact, invincible?
It's a fascinating setup. We aren't just looking at a stock chart here. We're looking at a collision between a massive, leverage-heavy corporate strategy and a very hostile macro environment.
So let's unpack this. We have a stack of sources today: SEC filings, analyst notes from Cantor Fitzgerald and TD Cowen, and some cryptic tweets from the weekend. But we have to start with the number that has everyone freaking out this morning.
Right. As of this morning, Monday, February 2nd, Bitcoin has dipped into the $75,000 to $77,000 range.
Which is a 10-month low.
It is.
And honestly, if you zoom out 5 years, that still looks amazing. But if you are Strategy Inc., context is everything. And here's where it gets really interesting. And by interesting, I mean stressful. We need to talk about their cost basis.
This is the critical data point. Strategy Inc. holds approximately 712,647 Bitcoins. Now, they didn't buy them all at once. They've been buying for years at all different prices. But if you average it all out, their cost basis is roughly $76,037 per coin.
Okay, let's just pause and let that sink in. Their average price is 76 grand. The market price this morning is hovering around 75.
Exactly. It means that on average, the market value of their holdings is lower than what they paid for them. For the first time in a significant stretch, their entire $54 billion stack is in an unrealized loss position.
Unrealized is doing a lot of heavy lifting there.
It is an accounting term, sure.
But it still hurts to look at. I was reading through their Q4 2025 report in the notes you sent over, and there was a number that made my eyes water. They reported a $17.4 billion loss.
You're looking at the impairment charges and the fair value markings. Yes, $17.44 billion. But we have to clarify this because it confuses people every time. That is a paper loss. Under the accounting rules, they have to mark their holdings to fair value every quarter. So if the price drops, they have to report that drop as a loss on the balance sheet, even if they didn't sell a single Satoshi.
So the money didn't actually leave the bank account.
No, it's value evaporating from the asset column, not cash leaving the checking account.
Yes.
But psychologically, it's brutal. If you're a learner tuning in, or just a regular investor, your first instinct when you see a $17 billion loss is panic, right? You think the ship is sinking, they're going to have to sell everything to survive.
Right. Sell, sell, sell. But then we look at what the founder, Michael Saylor, is doing, and it's not panic. In fact, it's kind of the opposite.
This brings us to the more orange signal.
I love that we have to decode tweets to understand billion-dollar corporate strategy. So yesterday, Sunday, February 1st, while the market is melting down, Saylor posts a picture on X.
Right, a cryptographic image with the caption, "More orange."
What does that even mean? Is he just redecorating his office?
No. In the Strategy Inc. lexicon, orange refers to the orange dots on our Bitcoin tracker website. Every time they make a purchase, they add another orange dot to the chart.
Okay, so he's hinting at a buy.
It's more than a hint. Historically, there's a very specific pattern here. If Saylor tweets a teaser like that on a Sunday, it is almost always followed by a formal 8K filing with the SEC on Monday or Tuesday, announcing a new massive acquisition.
So let me get this straight. The price drops below what he paid for his massive hoard. He is losing money on paper. The market is screaming danger, and his response is to buy more.
Precisely. It's dollar cost averaging on a corporate scale.
But isn't that risky?
It depends on your time frame. The irony is palpable. He is essentially buying into a losing position. But by buying at 75 grand when his average is 76, he's actually lowering his average cost basis. He's using the crash to fix his math. But deeper than that, you have to understand his mindset. He doesn't view Bitcoin as a stock to trade. He views it as digital property.
Right, like buying up real estate.
Exactly. If you were buying prime Manhattan real estate in the 1800s and the price dipped, you wouldn't sell your blocks. You'd buy the neighbor's block. That is the game he is playing.
It's definitely audacious. But a lot of listeners are probably thinking about something called a margin call. You know, that terrifying moment when the bank calls and says, you don't have enough collateral, we're selling your stuff. Given how much debt they have, isn't Strategy Inc. facing one?
That is the most common fear I see in the forums. But if we connect this to the bigger picture of their capital structure, the answer is effectively no. And here's why.
Walk us through it. Why aren't the creditors banging on the door?
First, you have to look at the assets.
Yeah.
Those 712,647 Bitcoins, they are unencumbered.
Unencumbered. That's a great word. Unpack that for us.
It means they aren't pledged as collateral. Strategy Inc. didn't take out a loan and say, hey, if Bitcoin dropped to 50,000, you can take these coins. The coins are just sitting there in cold storage, owned outright by the company. But there is no trigger price where a bank can automatically seize them.
Okay, that's huge. That's a massive safety net.
Yeah.
But they do have debt, right? I saw something about $8.2 billion in notes.
They do. They have a lot of debt. But that debt is unsecured, meaning the lenders lent money to the company based on its general creditworthiness, not against specific Bitcoin collateral. The creditors can't just grab the Bitcoin if the price drops. But what's even more fascinating, and this is where the strategy gets clever, is the timeline.
The maturity dates.
Right. The first of these convertible notes doesn't even mature until 2027 or 2028.
So they have years.
Years. They can sit on their hands. They can watch the price go to $20,000 if it has to, and they don't have to pay back that principal for a very long time. They aren't forced sellers.
All right, so the debt isn't due yet, but companies still have to pay the bills. They have electricity, employees, interest payments. If their software business, which, let's be honest, is a bit of a footnote these days, stops making money and Bitcoin is crashing, how do they keep the lights on?
That is the second layer of the defense.
Oh.
I like to call it the cash moat.
The cash mode.
In late 2025, they established a $2.25 billion USD reserve. This isn't Bitcoin. This is cash and short-term equivalents.
Yeah.
And it is specifically ring-fenced.
Ring-fenced for what?
Its only purpose is to pay interest on their debt and dividends on their preferred stock. Based on their burn rate, that cash pile gives them a runway of about 21 months.
So they could make $0 in revenue and Bitcoin could stay crashed and they still be fine for almost 2 years.
Exactly.
Yeah.
They can survive a crypto winter without selling a single Satoshi to pay the bills.
Yeah.
That is the fortress they built.
Okay, so the company isn't going to implode tomorrow. That's good to know. But we have to address the elephant in the room, or maybe the bear in the room. Why is everything crashing? Strategy Inc. might be safe from bankruptcy, but their stock is getting hammered. It's not just them, right?
No, this is a macro storm. Strategy is just a boat on the ocean, and right now there's a hurricane. If we look at the broader context, we have a double whammy hitting the financial markets right now.
Let's start with the big one, the Federal Reserve.
Right. President Trump just nominated Kevin Warsh for Federal Reserve Chair.
And the market reaction tells me they aren't throwing a party.
Well, Warsh is viewed as hawkish.
Meaning he likes high interest rates.
He generally favors tighter money and is skeptical of the Fed constantly bailing out the market with liquidity. Now think about what Bitcoin is. It's an asset that historically thrives on liquidity, on easy money sloshing around the system. When the market sees a hawk coming into the Fed, they start repricing that liquidity risk. They are worried the easy money tap is about to be turned off.
So Warsh scares the crypto market.
Not good, kids.
And then, just to add chaos to the mix, the government decided to shut down.
Yep, the U.S. government entered a partial shutdown at midnight on Saturday, January 31st.
What does a shutdown actually do to the market? I mean, aside from closing national parks.
It creates an information vacuum. The agencies that release economic data, jobs reports, inflation numbers, GDP, they start working. Investors hate bad news, but you know what they hate even more? Uncertainty. When you don't know what the economy is doing because there's no data, you go to cash.
That explains why gold and silver are selling off too.
Exactly. It's a dash for cash. Sell everything that isn't nailed down. Strategy Inc. is just getting hit by this perfect storm of political instability and monetary tightening.
So strategy is holding the bag while the macro environment falls apart. But I want to pivot to something that feels a bit more technical, but it is absolutely crucial to understanding why their stock is behaving the way it is. We talked about how they buy Bitcoin. They don't just use profit from selling software. They use what the internet likes to call the infinite money glitch.
The infinite money glitch. It sounds like a video game cheat code. In finance terms, it's basically capital markets arbitrage.
Break that down for us. How does the glitch work?
Okay, essentially, Strategy Inc. sells its own stock to the public. They use that cash to buy Bitcoin. The glitch works because, historically, the stock trades at a premium to its NAV, its net asset value.
Meaning the stock is more expensive than the Bitcoin it represents.
Right. Let's use round numbers. Say they hold $100 worth of Bitcoin for every share of stock. But the market gets excited and buys the stock for $150. Strategy Inc. can then sell a new share for $150, take that cash, and buy $150 worth of Bitcoin.
And suddenly the amount of Bitcoin backing each share goes up.
Exactly. Everyone wins. It's accretive. It's a flywheel.
And here is where it gets sticky. Looking at the numbers today, Monday, Feb 2nd, they are not trading at a premium anymore.
No. With this price drop, the stock is trading at a discount to NAV. Depending on which metric you use, it's around 0.7 or 0.86x.
So using that same example, they hold $100 of Bitcoin, but the stock is selling for $86.
Roughly, yeah.
So if they sell stock now to buy Bitcoin,
They are selling $100 worth of value for $86 in cash. That is value destructive. It breaks the glitch. If they sell undervalued stock to buy Bitcoin, they are actually diluting existing shareholders. Your slice of the Bitcoin pie gets smaller.
that sounds like a major problem for their strategy.
It creates a lot of friction. They have a metric they invented called BTC yield, which tracks how much Bitcoin sits behind each share. They want that number to go up. But in early January 2026, that yield dropped to nearly 0.1%.
0.1%. That's basically flat.
Exactly. The share dilution was happening almost as fast as the Bitcoin acquisition. They were running just to stand still. And now, with the discount, they're potentially running backward.
And the critics are absolutely loving this. I saw a quote from Jim Cramer. I mean, look, you always have to take Cramer with a grain of salt.
Oh, a whole salt shaker.
Right. But he was pretty cheeky about it. He suggested Saylor should jam up the Bitcoin price to 82.5 to fake a double bottom chart pattern.
It was a joke, obviously implying market manipulation. But it highlights the sentiment on Wall Street. There are analysts warning that the underlying software business, the thing that actually makes the software products, is now negligible. It doesn't matter anymore. The stock price is purely a function of Bitcoin sentiment and this premium discount dynamic.
So if you're holding strategy stock, you are basically strapped to a rocket that is currently pointed slightly downwards. But Saylor isn't slowing down. In fact, they have a massive event coming up later this month.
Strategy World 2026.
That sounds like a theme park. Strategy World.
It's their corporate conference in Las Vegas, February 23rd to 26th. And if you look at the themes, they are not backing down. Freedom by design and Bitcoin for corporations.
They're doubling down on the branding.
They are. They have a stated goal.
1 million Bitcoin.
1 million. That's a lot of coin.
That would be approximately 5% of the total supply of Bitcoin that will ever exist.
That is mind-boggling. One single company owning 5% of a global monetary asset. It creates a scarcity dynamic that we haven't seen before. And despite the crash, despite the discount, the analysts aren't abandoning ship. Cantor Fitzgerald still has a price target of 213, and TD Cowen is at 440.
So they think this is just a bump in the road.
They view this crash as a volatility play, not a fundamental break. They believe that if Bitcoin recovers, the premium returns, and the flywheel starts spinning again.
What about the other guys? Are there other strategy inks out there?
There are peers, but they're struggling differently. Take Bitmine. They bet big on Ethereum.
Oh, right. Ethereum has been getting hammered.
Bitmine is facing huge paper losses, somewhere in the ballpark of $6 billion. Then you have MRI. They are pivoting. They're expanding into data centers, trying to get that AI revenue to smooth out the crypto bumps. Strategy is unique because they are refusing to diversify. They are pure play Bitcoin.
It's singular focus, or obsession, depending on who you ask.
It raises an important question about corporate strategy. Usually, business school teaches you to diversify to protect wealth. Saylor concentrates to create wealth. It's the exact opposite of traditional teaching.
So what does this all mean for the listener? We've got the underwater status, the Fed nominee spooking the markets, the government shutdown, and Saylor tweeting orange dots while trading at a discount.
For you, the listener, this is a lesson in the difference between conviction and leverage. Strategy Inc. has built a structure, that fortress of unencumbered assets and cash reserve that can survive this downturn. They won't go bankrupt tomorrow because Bitcoin hit 75,000.
Right.
But shareholder value is currently trapped. It relies entirely on Bitcoin recovering past that $76,000 mark. If you are an investor, you have to ask yourself, do you believe the macro storm, the Fed, the shutdown is temporary? Because strategy is betting the whole company that it is.
It really is the ultimate high-stakes poker game, and Saylor is sitting there with a straight face, pushing more chips into the pot while everyone else is folding.
And that leads to a final provocative thought. If Michael Saylor is willing to buy when the market is bleeding, when his own position is underwater, and when the premium has turned to a discount, is he the ultimate visionary seeing value where others see panic? Or is he trapped in a loop where he must keep buying to maintain the narrative? Because if he stops, the whole thing unravels.
Is he driving the bus or just a passenger on a bus that can't slow down? That is something to chew on while you watch the tickers today. It's going to be a bumpy week, folks. Thanks for diving deep with us.
Always a pleasure.
Catch you on the next one.